Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So, today's agenda, we'll go through the regular schedule, market update, update the earnings trades, and then go through Joe's analysis. So let's get started. Okay, some big transitions yesterday. NASDAQ, Russell back went into one, SPX, a couple days before that. Dow also was the first one that went back into one, DIA. You can see sectors also a lot back in one. I only have two that are in bear states, discretionary, consumer discretionary, and then we have energy in four. Everything else went back into one. And the longest running one is kind of surprised is that real estate one down there, 51 days. So that one's held. Then Staples, that's healthcare, been in there, 30, utilities 30. So some of them held a lot through that little violent action that we saw. But if you look at green pie, last week we were 37, right above 50 right now. And state ones are getting close to overbought, that's 45s. So we just basically had a lot of twos, fours go back into one. Not a whole lot going on in the bottom area. So let's look at the market pulse here. So let's see. Last week we were looking, they're right on there. It's kind of dipped. That red dipped, I guess, popped above, and then everything flipped. That's how it's been going the past a couple times here. You know, state eights get above. It's kind of near the bottom. Then especially over here, then we flipped it over. So what we were looking at were the twos and fours. Last week the twos had started dropping, and then the fours started dropping, and both pretty much cratered. Those going back into one. So that's kind of our big indicator for deep pullbacks is that four, two's going to four, and this basically just turned out to be a one into two back to one so far. So that's what we look for. Bullish markets 1 2 1 2 for the states. So and then really nothing going on in the bottoms. Eights are pretty flat, sevens are same thing, little movement, but not much. So it's really the 1 2 1 2 type action. So, um, getting with pretty much the lows bottomed. Nothing going on there. Although we do have a decent number, 26%, 27 in state eight. So there's potential to make lows, but nothing happening. Obviously, I had that nice monster run, kind of near the highs, but not quite there. So, but the 1 year highs, we had a little pop here, so that's obviously a bullish sign overall. And to see if we can kind of get a continuation of that, see if we can get this kind of movement, or this one especially, that's very bullish back here. But just had the one little pop up here with the lows, kind of same thing here, one peak, and then that was it. One peak here, that was it. So far, and off to the races here. So we'll just have to see, just kind of continue, see if we get more transitions into the bullish states. It'd be nice to see, bullish case wise, more of the eights getting into seven. So see that the eights drop, but nothing really happened in there right now. So, all of these crossed. We talked about that last week. So, um, 2050 obviously way off. And then 200's never, just had that little touch and go. That was kind of bottom. So that was a good indicator though, kind of matching, like the little cross. So, and let's look at bullish bearish. So we did cross slightly above. I'd like to see some kind of continuation, getting up in the near the 70, but you know, sometimes it does flip back and forth around the 50 area. So just keep your eye on that, on the highs and things like that. So, but overall, when we see these greens, it's definitely giving us a bullish like indicator. State one for SPX here on the 16th. So it's moved up higher. You can see 52-week high here, 5669. So the targets are above that. So we'd have to make all-time highs to get up into that kind of first resistance range. But this would obviously be a resistance range too. I think currently we're 5612. So we're about a little 50-ish points away from all-time highs, SPX. So, but just started state one, obviously off to a good start. Resistance here at the high, and then, obviously we'll have the target 1-2 area as resistance also. And above that, you got 3. So it's almost 5,900. It's a ways off. Anyway, for support wise, obviously we got entry price. You want to stay above that. We'll have our moving averages. We'll go into on the next chart, and then bottom of the range. We're going to trade near the stop loss, 5,400. That will be support levels for SPX. But it's starting off on the right track. The typical pattern, kind of go up here, resistance, support, do the average move. So, and that's over this average time. I just make it shorter. So, it's off to a good start. So let's look at the charts here. Let's see, back above 20, back above 50. Obviously, we talked about that last week being bullish. So that was right there. Last meeting we were right above that. So just took off. So you can use that 20-day as your support. Actually, there's a lot of support right in that range. The bottom of the range, 5,400. Top of the range, 58. So let's see. We'll pull up the numbers for 20 and 50. Obviously in the same area. 20 is 5,460, 50 is 5,430, and then bottom of the range 5,400. So a lot to support down there at the bottom. But I would just use the 20-day. That's been at least the last couple of runs higher as the good support level. Let me pull it out so we can just kind of show that. All right. So the November run here, really the top one's the 20. So once that broke, turned over, same thing here. Most, I think only 1 or 2 days below, but once we saw the resistance board drop, everything kind of fell apart, and then jumped right back above it. So we're right above those. Have a good distance between them too. 5,460. What I say we were here, 56. So we're well off those. So we got plenty of room to run. But that's what I'd be using, as far as support, and it's looking bullish. Again, after that violent pullback. So all right, we'll get into Russell. So just started. We were positive last I checked. 14 points. So see if we can make similar run here up towards those first levels of resistance. Target 1, 2. So that'll be your first level. High is at 2,300. That's the top of our range. So, target 3 is right below that. So obviously we can make a run like that, but typically the pattern is this. So, starting off on a good foot, at least today. So we'll see if we can get up in that first range, support resistance. And, just started out 36 days on average, almost 6% move. So could be significant, especially with some of the kind of things being a tailwind, just kind of crude's dropped decently. Down to 72 is kind of, up in the 78, 79 range. 10-year below 3.8 right now. Anything below, we talk 4 or 5 is good, but definitely below 4 is good. And we'll talk about rates here in a little bit. But so as far as talks about the resistance level, support, staying above here, but more critically staying above 2100. Um, those would be your two kind of support levels here. We'll also look at the 50-day. Also, every 100 points can be resistance, so that's right in that target 1-2 range, 2200, and then top range 2300. So just starting out state one, everything's state one, which is at least indice wise, which is good. The 1-2 is a good thing. So we look here, back above 50-day. Last week we were right below it, so we popped up above. Staying above that, obviously critical for the Russell. I'll do the ranges. There's our 21, top of the range. Nailed that one last time, 2300. So, staying, obviously we're at 50 days right above 2100. So just call it 2100 for both, but staying above that, staying above entry price, obviously positive, net positive, and then getting above that, T1, T2 range, which is right around that 2200. Let's see if they can make another run at the top there, 2300. Definitely going to say I called that one. Anyway. Okay, but overall looking constructive, despite, I don't know if you guys saw that, like payroll revision, which was crazy. I sent it to Joe. Um, there's an article, CNBC, payroll growth revised down 818, which is what was it, second largest ever and largest since 2009, that kind of revision. It's huge. So nearly 30% less than what was reported, which is crazy. So, but markets shook it off. So, all right, let's sit there. Let's sit there. Talked, 10 years kind of calmed down a little. So let's just kind of see if this chart pulls up. At least over there, this month so far, we hit that low 368. Tried to get above 4. It's kind of like the resistance point right now, and it's been just kind of pretty much a little up and down, but not as crazy as some of these moves, right? So we'll see. But obviously the small caps will like this, especially the lower we can go. So so well elevated from this huge run up. But so after rates, let's talk the interest rate policy. So September, right now, this is 1 here. So we're at 525. So this would be a 1%, not a big change over the week, over the month, obviously big change. So be, looking like quarter point. This is 1 month off. 28 days. So between 1 and 2, so definitely expecting a cut at this point for September.
Hey, Josh.
Yep.
Hey, I'm trying to relate the employment number you spoke about, 18
Mhm.
or 818,000 fewer jobs.
Yeah.
Wouldn't that support the Fed cutting rates?
Yeah. I
Okay.
would expect. I mean, they have multiple factors. Their dual mandate is price control and employment, right? So employment's part of it. The big, half the equation.
Right. I was just thinking this adds, I would think, some pretty good support to raising the 25 or maybe the 50 basis points.
You
I
mean
don't-
dropping?
Yes, yes. Thank you. Yeah.
That
All
that
right.
would be a shocker. Yeah, well, we're hiking 50.
Yeah. And the
Yeah,
market goes into turmoil. Okay. Okay.
yeah,
So
yeah. I
Josh,
mean, I'd be interested to see the unemployment rate, but yeah.
Josh,
Go ahead, shoot, Dave.
yeah, this is Dave, and that's a good point that Lee just brought up. I think it was Lee. Uh, I saw the same numbers, and then I read a couple of interesting articles afterward about all the phantom jobs that have been reported, and a lot of the pot shots taken at the government for portraying bad info. But think about it: the government only portrays what they're given. And part of that is the collection of information process and whatever. But I think that will be interesting to see how Powell responds. He'll have to respond to that very question that was just asked in his conference call on Friday, or his news. It's not a conference call, but the news blurb on Friday that when he talks. And because I think everybody thinks exactly the same thing, that if there's not that many jobs, it gives the Fed a better viewpoint to cut rates. But the question the Fed really has to ask is, are all the jobs that are actually being awarded at higher prices, is that still a cause, however many that is, if it's less even, is it still justification for a tight labor market? And I don't know that. And then the Fed is probably trying to figure that out too. So there still might be a question as to, even though there's a lot of fake jobs out there, the ones that are being awarded get awarded at higher entry level salary levels, and that just puts pressure on all the incumbent employees that are doing a job that then would request a raise. So I don't know whether the Fed's out of the woods there, but it's a great question, and I'd be very interested to see how Chairman Powell responds exactly to that question on Friday. That'd be very good. Good question.
Yeah, well, I think at this point, with that and the employment number, and see how that translate to the unemployment number, but that revision, that, and how the inflation ratings are coming out. I mean, it just seems like it's green light, at least for I don't think they would do 50 unless it's some real bad data between that now and then. I would think they just start with a quarter, but it seems like that it's there's nothing holding them back at this point.
Right, I agree.
Josh, if I could just add something about the article. Thanks for the comments, everybody. My takeaway for that is just I wonder at what point the government numbers are just going to be not ignored, but thought to be maybe less important with regards to the total direction of the market. What that thing does for me, and I mean, the last time, as Josh pointed out, you had such a significant revision was 2009. 2009 makes sense because of what was going on in the world. It took them, these numbers are only through March of 24. So it took them 5 months to get this revision out. And, what it says to me is, the earnings coming out of individual companies, and this isn't breaking news, but far more important than some of these government numbers that happen to move the market. I mean, our last big sell-off aside from the Japan carry trade, you got the soft ISM numbers and you got the unemployment number that was softer the next day, and that seemed to be the catalyst. People are always looking for excuses. I just think that, stuff like this is just so ridiculous that at some point you have to discount, the government numbers. And, that's,
I agree.
that's what
I mean, if you look
that's
at
what
all
I'm
the
gonna start doing.
monthly, Joe, if you look at the monthlies, they revise them down every single time. The monthly numbers
That's
that
right.
come out. So, at
Yeah.
least for the last year. So it
Yep.
makes sense. But not to dive into conspiracy theories, but some ain't right with the data. So yeah, thanks, Joe. Thanks, Lee and Dave. So as we walk out to the rest of the year, this is a 50-point cut here for November, and then possibly 75 basis points. So, and then you go into, and that hadn't changed a lot since last week. Big change over the month, but since we talked last week, not much movement. Interesting to see if they move much today. And then December, this is a 1% cut. 525 to 425 is kind of median. Week to week, nothing but huge change over over a month. And if we go even multiple months, we are maybe two cuts. But now it's down to a full percent. So a lot of movement there. I think we can probably expect something in September. Pretty confident in that. And then I was going to pull this up. The TLT, we haven't looked, Joe talks about this. Sometimes I do too, but if rates do drop, this is obviously a pretty good like holding. Just FYI, if you go out the long-term chart, it's been basing here for a long time, but this thing, if you look at it, basically holds long-term treasuries. It's not any kind of recommendation, right? The rates could still spike if there's problems selling them, but here's the yield 3.75, and as yields drop, these look more and more attractive, especially longer term ones. So just something to think about. Yeah, this one's kind of like if you pull up the 1 years, like this double top. Yeah, it's the top here, 100, 100. So getting close again. What's it at right now? 98, 99. So might be a good married put. I don't know if you can get cheap puts. Anyway. All right, so balance sheet. Yeah, look at this guy. We've been talking about this long time. Pretty much flattening out, like you can see here, really started to slow down, and then pretty much nothing. 2, 3, 7, 1, 7, 8. Actually went up that week, so flattening out. I don't know if that's a sign or not. This goes positive. That's definitely positive, unless it's some kind of you know um, response to a crisis like this. But if it starts if it stops or just starts slowly climbing, that's a positive for stocks. Obviously, it's injecting liquidity into the system. But obviously, if it's a shock, market's gonna gets hammered and turned around. But this has definitely been slowing as we the runoff. So I don't know if it's going to stop or they're going to hold it above. We kind of talk about that level at 7 trillion. That's the post-COVID kind of starting point there. Right around here, 7. So definitely flattening out though. So anyway, that's it for market. Any other comments, questions?
I think the whole thing
Looks like-
hinges on what Powell does on Friday.
Yeah.
If he comes out and indicates there's going to be a rate cuts, I think the market takes off. If not, everybody's expecting it. You showed the futures are expecting a rate cut.
Yeah,
I've seen things like there's been a surge in mortgage refinance requests because mortgage rates are going down in anticipation of rate cuts. So
yeah, I think it's a little early for people to be doing that.
yeah, but
Honestly, yeah.
if he, I think if everybody's expecting a rate cut, so if he confirms that, that'll be good for the market. If not,
Yeah,
that's a
I don't know. I
problem.
don't know if he'll show his hand like that. You know, I think he'll, yeah, you know, they're always data dependent. I don't think he's gonna show his cards a month before, you know, and kind of box himself in. But I think the language will be more cut. You know, I think it'll be more towards cutting, but I don't think he'll guarantee anything, obviously.
Well, given the downward revision we just saw in employment, maybe he should announce a cut on Friday.
Yeah, it'd be nice.
They can do that.
Yeah,
You'll
Yeah.
you'll also notice all four major ETFs are painting. I don't know exactly what the candlestick is called, but it looks like a T where the opening
Doji,
are at the same spot.
this right here,
Yeah, like that. But I'm talking.
that's a
today.
doji.
You're obviously end of day, but yeah, like that T there. If you look at it live on Yahoo Finance, all of them are painting that T.
Hmm.
DIA, IWM, SPY, and Q.
Yeah, I don't know if I do the candlesticks here.
Give you
Um,
six.
This one here.
Yeah,
Yeah, those are,
stuck at that level.
what's that?
I mean, I think that denotes indecision. You know, they're waiting on the Fed. Every opening and closing are nearly exactly the same.
Mm-hmm. Yeah, I'm not
So Josh,
I'm not a big candlestick guy. I mean, I've done some
neither.
testing, but yeah.
so Josh, this is Dave. Could you put back the TLT chart or the any chart really that shows the platform? I was looking a couple of days ago trying to decide against between a couple different strategies on a particular idea, and current excuse me. One thing that I think would help decide between a couple different bullish strategies would be if there was you showed the number of days in state one, but
Mhm.
what's the average day to state one from once you break into to the target one once you break into state one? That's didn't say that very well, but the average days to target one once you hit, and you get into state one would be a helpful kind of thing to decide between like a bull put or a bull call, for example.
Yeah, I don't know. Because then you would need to know, like, because not everyone hits that target one, right?
Correct. But for those that, well, yeah, that's true. That's true.
So we would have to do something like for all occurrences that hit target, you know, to say target two. You know, the average time, you know, if it hits target two, the average days, something like that.
Yeah, maybe I could figure out some sort of back test for that, but that'd be kind of a, I know I've debated that myself a number of times, whether, I'm bullish on a particular idea, should it be a bull call or bull put? And then I have to, what I ask myself is, well, how fast is it going to get to target, to any particular target? We'll say target one or target two or target anything.
Yeah.
'Cause that's where you got to kind of pick your expiration and strikes against. And anyway, that kind of information would be helpful if it was available.
Well, you can go in and do the trade scanner for transitions to state one. It's a little slow. We're working on it, but um, if you put in like you can test, do all symbols, if you want to do like Rust, RUT, or Qs, you can go in here and it's every occurrence. So even when it doesn't hit the target or whatnot.
Okay, I'll have to look into that some more. Thanks for, I'll look there.
Yeah.
Oh,
Yeah, you can just flip between calls, put, bull call, bull put, however you want to tweak it, and you can analyze, and get quick feedback.
But Dave,
Oh.
that is, it's an interesting subtlety that you bring up. The reason you're looking for that information is to try to decide what type of option strategy. I think that makes a lot of sense. As Josh said, and we've been saying it now for 3.5 years, as long as I've been here, we continue to try to evolve and get this thing where we want it. One thing that I have thought of that we have not implemented, but, how fast do symbols get to target 3? Obviously, if they get there. But if they get there quickly, to me, that suggests, you got a rocket ship. And so that also helps to define the type of, option strategy you may want to consider. So we will do something on that, when we get it, I assure you. When we get time to do it. But I think it's a real good idea.
yeah, usually when I have an idea, it's a bullish idea. I do more, I execute more trades on the bullish side than the bearish side. And it usually comes down between a bull put and a bull call, or a calendar trade that's out of the money to the upside. So those are, it's like, okay, which one do I pick? How fast do I think it'll get there? And that's the deciding factor for a lot of things. So anyway, you live and learn. So I've been learning over the time, but all the tools that are available can help. So I'll look into the screener that Josh was just showing a little bit more. Thanks, Josh.
Yeah. Okay. Thanks, Dave. Thanks, Sadir. All right. Any other questions, comments on the market? All right. Let's do a quick run through on earnings. Definitely had a nice turnaround in earnings. So bullish pre-runners. We don't have a lot active right now, but the good news story was this AMAT. Pretty much came back to even. This thing, thank God, this thing got crushed right away. That's the big down days really kind of ate this up. So we were down a lot, 1,000 at one point, but clawed back to an even, pretty much down a little, but overall we're up like a little bit here. Pretty much the story. We're up a little bit in most of them, and then a couple are real good. So bearish pre-runners, similar, up a bit. Nothing to write home about, but up a bit there. And then bullish runners. We had a lot closed out. Up another 500 here. 4 out of one loss, 4 winners. Bearish runners. We got 1 active match. We're down a little bit there. Still, up, decent amount. Not a lot, but the ball rise have been good though. This one's up a good chunk. for, 5 trades, 1 open, this one just opened. I think we even had another one this morning. But, yeah, these ones definitely have been hitting good, past few quarters. I think it's just all the, the volatility's getting higher and higher, so. And then non-mover, so we had, we're now up even after that one loss, so we got 1 active. This one's looking good. It's gold miner, but AMAT, that was a quick winner. So we only had the one, big loss, and the rest were good. So this one's up, decent too. So actually turned, it wasn't looking that good for a while, but actually, we're up across the board right now. So, and I guess I can pull up the quarterly plan. We had 2 trades pop this morning. We can obviously find those in the earnings trades. And then this would be the last trade quarter because we put out the new plan on the 15th, under a month. But I got 1, 2, 3, 4, 5, 6, 7, 8, 9 trades left. Mostly vol rise, which have been, good. Couple of runners. So that's it. Any questions, comments on the earnings? All right. Well, thank you all. I'll turn over to Mr. Joe. Yep.
Hey, Josh, a quick
Yeah.
question.
Yeah.
Did you say the new earnings trades come out on September 15th?
Yeah, around then. That's when I'll put them out.
Okay. Okay, good.
Every 3 months, right around so it'll probably be the 18th. That meeting, I'll push them out right in here, 17, 18.
Right. Thank you.
Yep. Okay, you ready, Joe?
All right, Josh, let's see. Let me grab the screen here. Let's see. Okay. Can you see my screen?
Yep. Got your email.
Okay. Perfect. Let's see. Before I get started, hey, Sudhir, haven't quite been, we missed one another, I think maybe the last 2 or 3 meetings, but just a shout out to you. I think I mentioned it last week. You weren't on. Just one hell of a call end of July about you were bearish. So good for you and the homework you do. That was just spectacular. And what a sell-off it was. I mean, just absolutely historic. Went on about that last week. The movement in the VIX, just historic in nature. And coming out of last week, I kind of thought, heck, we had a 550-point range, in the S&P, 3,200 in the NASDAQ, a couple thousand in Russell. I thought, we would at least, be in a trading range for a while. And as Josh says, it looks like the market's got some tailwinds here. And, a lot of these indexes are obviously banging back up against all-time highs. So, on the, earnings, and I mentioned this before, just, for people who were on it, I think a great, complimentary free source of earnings data comes from the London Stock Exchange. And it is, if you just Google LSEG data, it'll pop up, you can sign up, and they come up, out with updates that are quite detailed, in the S&P and other sources. And their analysis as of last Friday, with almost 470 of the S&P 500 companies having reported, earnings were 12.5% above, what was expected. I know we've had many debates, the market walks down expectations so they can beat, but it's 79% of the companies have beat, 5% are in line, 16% are below. All good numbers, but that 12.5% earnings growth is certainly more than what was forecasted coming in. I think we were 7-8% looking at that for the quarter. The year was back-ended with some 13 and 14% growth expectations, but we seem to be getting close to those levels at this point. So, lsegdata.com if you don't already check them out. As Josh pointed out, we got, all the big, the Dow, the Russell, NDX, and SPX, all in state one now. And, on average, 35 to 45 days is about the average state one move. So not rocket science, but I went out 40 days on the calendar. We're talking mid-October to get to the average length of time for these state ones if we're to stay in state one. So, we all know what's happening on November 5th. It'd just be interesting to see whether the market, can maybe coming out of Friday's announcement from Powell, maybe the market has another leg in it in the short term as well. And there seemed to be, certainly from a Delphian state perspective, certainly seemed to be some support for that case. So I'll go through a few charts, and as Josh pointed out, TLT. I thought I would, take a look at that today for one reason, really. And, I think this happened last week. We are, as we know, we are now in state one in TLT. We've been there for 7 days. Well, when I went back in and was, just taking a look, that is, quite unusual. We hadn't had a state one in TLT since November of 2021. And, and then prior to that, there were just a couple. There was one in August of 21. There was one in, and then I started the chart in July of 20. We had that state one back there. So you get back to July of 20, this is only the 4th state one. The fact of the matter is the previous state ones were not good state ones, but, the algo corrected itself damn quickly. And, we get into the 248 routine. But, really unusual to have this state one. So I think it's just even more important to keep an eye on TLT going forward here. 30 days. So we'll see what happens. And then, I'll go back, the sectors. Good old XLK did roll into state one last night, as I think people, are aware. We know the history of XLK as leadership going back to the November 22 lows. It was, the first one to do it, followed by NDX. And we had, some awful long runs. So, certainly got to keep an eye on XLK now. And, my intent for today was, let me pull out, the retracements, to the upside, coming out of this sell-off. There's no point. Most of these charts have corrected back to the old highs. So, we've exceeded the retracements, on the way back up. And now it's just a question to, see what the market's going to do going forward. But certainly we have some tailwinds to the upside for sure. XLK, again, 41 days, 7%. Man, if you got, another 7% from here, there'll be a lot of stocks going up. So that's XLK. I did, like I did last week, I wanted to go through the MAG 7 again. Last week we had 6 bearish, 1 bullish. Meta was the only bull. It's still in state one. We did transition, a little bit this week. We've got 4 bearish and 3 bullish, out of the MAG 7. Nothing dramatic here, with Meta, coming out of the lows. But I'll go through all 7 of these kind of quickly. Apple. This is really the one that I guess changed into a state one from 2. So let's, these V bottom charts are just, just absolutely breathtaking. And, we're back into that 40+ day average. I mean, it's saying 18%, average move. So, we just, could be quite a tailwind for the markets. Microsoft still staying where it was in state 4. Now that's just pulling back into a retracement. It sort of looks like, this thing maybe is just going to trade in a range for quite some time. Doubt we're going to get leadership out of Microsoft with the market moving forward would be my guess. Google kind of the same thing, just lagging a little bit. And, it's, I think, a combination of, some of the multiples coming out of these things and that transition into, the Russell and out of some of these things. So, I'm guessing a pretty good chance that, you won't necessarily get leadership here. Amazon, what do we got? Yeah, this is one of the few that, bearish, almost up to its average number of days at 14. And it has, looks like basically filled the big gap and looks like a range trader too to me. Tesla, also still bearish, doing a retracement. This is honestly what I expected out of the averages, frankly. We had the big sell-off, 17% in NASDAQ, 10% S&P, and I think 13% in Russell. I expected just retracements like this back and fill, see what happens. But, the indexes have been far stronger than that. And then we come to NVIDIA. And, the earnings are after the close next Wednesday, which we said last week. I don't know how many of you realize, but NVIDIA did go into state one a couple of days ago. It hasn't moved much. The average move is 28%. Plenty of occurrences. You got a long way to go for the averages. So, Sudhir pointed out, we've got Powell on Friday. We get through that. I don't think there's any question that, the next big thing are earnings after the market close next Wednesday. From a numbers perspective, moving the markets, there's nothing like NVIDIA coming up. I mean, tomorrow we got jobless numbers. We got a bunch of housing numbers, both on Thursday and Friday. We get a couple of Fed banks reporting tomorrow and next Tuesday. We got durable goods on Monday, but I think the market's waiting for NVIDIA without question. And just darn interesting that this thing has rolled into a state one at this point. And in terms of the NVIDIA numbers, we spent a fair amount of time talking about this and went back to my notes last February. And in this coming quarter, looking at a lot of different sources, basically, I find a range for expected earnings between 58 and 64 cents. Pretty wide range, but, depending on the source, Zacks, FactSet, there's a lot of them out there. There is a range, and that's 50 to 80 analysts composite there. So 58 to 64 cents. So when we talked about NVIDIA back in February before the earnings then, the market at that point was looking for, forward looking, they were looking for between 40 cents and the high end 53 cents earnings expectations for this quarter. And we are now 58 to 64. So, it just continues to be a rocket ship. Price-wise, I won't even talk about, the price estimates at that point, have obviously been left in the dust. We've had the 10-for-1 stock split. Not earnings, but revenue expectations are for $28.5 billion next week. So, I think it'll be a market mover, but that's a week from Wednesday. So that's NVIDIA, and again, long way to go to those targets. We're talking 14%, 18%, and 35%. So bring on next Wednesday's close. I just thought, taking a look at NVIDIA, we don't pull up the weekly charts too often. I'm not sure that this says anything to me except that stock doesn't stay down for long. We know we had the April low, and again, like we talked about last week, these bull market corrections have essentially lasted 3 to 4 weeks. You know, none as violent as what happened a couple of weeks ago. I mean, I still can't believe that, you know, the speed of that move and, you know, what the VIX did and just how things moved. But hey, that's the markets in 2024. I thought, you know, just pull up, you know, the semis a little bit. You know, this thing, we've got NVIDIA is 20% of this thing. Let's see, Broadcom is about 12%, and I think, Taiwan Semi is 12%, and Broadcom is 8%. So here's the index itself, not a state one yet, but certainly, you know, not heading south either in a state too. So I think, you know, bears watching, and then I just, you know, pull up the other. Here's Taiwan Semi, and interestingly, Taiwan Semi, which is the number 2 weighted issue in this index, is now in a state one. I mean, look at the magnitude of those moves coming off the August 5th. Even the closing price, forget the low. I mean, it's just, it's breathtaking. And lastly, I think is Broadcom, and lo and behold, Broadcom also in state one. So I think, as Josh said, there are plenty of tailwinds for the market here. You know, we've got the question of the election and, of course, the geopolitics, you know, all over the world. So, you know, I think earnings continue to be the driving force. They continue to surprise, and doesn't seem to be any reason for them not to continue. We get it closer to the election and policies and change in rates if you know, the Democrats stay in power, and you know, the 2017 not rate package, but tax reform, a lot of that stuff rolls off. I gotta believe that stuff's going to become important for the markets at some point, but doesn't seem to be just yet. So happy to take comments or questions if anybody has any.
Joe, did you hear anything about guidance projections, average guidance projections going forward, being in line, up or down, or anything like that?
The only thing, Dave, that really has stayed consistent that I've seen is, you know, they're still looking for solid double-digit growth in earnings through this year. And I haven't seen anything different from that. And I did spend some time looking, and no headwind from an earnings perspective that I've been able to find yet.
Okay, the only reason I ask is that a few of the conference calls that I listened to, that there was more talk about, well, we might not have the pricing power we had 2 years ago, kind of thing, or a year ago.
We may not have the what? I'm sorry, Dave, the what?
I'm sorry?
We may not have the what?
Pricing power, which would
lead
to
right.
upside guidance, or increased earnings because we can raise prices. I mean, it's good if they can increase earnings without raising prices. That's great. But if they've only been able to do that while raising prices, and now prices are coming under more fire, especially by the Democrats here, you know, I thought that might have an influence on the future guidance projections overall on you know, companies in the S&P or the NASDAQ or the Russell or whatever.
Yeah, it sure makes a lot of sense. And, you know, so, you know, how we can track these margins broadly going forward is challenging, but, you know, I'm sure you're right.
Sometimes you can't track it. They don't give you a way to track it. You just got to look at the, you know, the track record for the earnings and revenues. So that's what we do.
Yeah. Yep. Hey,
Along
Dave.
those lines, Joe,
Hey,
have you looked at I haven't, the latest Yardini total S&P 500 earnings? Are they up or down?
I'm sure they're not down, Sudhir. You know, they have not been, you know, there's not as much coming out of him. I have not subscribed to his stuff. But I know he was very adamant about, you know, the recession talk, you know, that happened end of July, beginning of August. He was adamant that he didn't believe it. He thought that, well, you know, there was a number in there. Oh, yeah, one of the employment numbers, you know, seemed to be off by like 400K because of, I think there was a hurricane somewhere, and the government said the numbers hadn't been impacted by the weather. He was steadfast that, you know, he thought there was real weather impact. So he continues to be darn bullish. But I have not seen, and so I got to believe he is still a believer in earnings, have not seen, you know, a projection, a new projection in well over a month.
Because, you know, these things they do where they say a company beat estimates and all are kind of misleading, because they can lower their outlook and then beat the lowered outlook. And, you know, like, for example, Apple's revenues have been flat or declining for a while, but they beat, you know, the projection. And you know, the talking heads kind of leave that out, that revenues have declined, but they beat the projection. So it'd be interesting to what the actual raw revenue and earnings are for the S&P 500.
Yeah, Sudhir, I couldn't agree more. And you know how much darn stuff we have. I shouldn't say darn, but how much information we have on our platform. And, you know, Josh and I talk about it frequently. You know, there are areas where we want to do a better job putting some of this stuff together rather than having to go chase it. And I think to your point, taking, you know, different parts of the information we have, putting it together, and then coming up with, you know, something is an area where we can improve, and hopefully we will going forward.
Yeah, just a thought.
Yeah,
That's how these bullish runners and all that work, is that you think, oh man, that company is revenues are declining, but you know, the management plays this game with the analysts where they slowly lower the projection, and then they beat the projection, even though the projection,
no doubt about it.
was a decline. And then the talking heads on CNBC only talked about the beat, and the stock goes up, fooling investors, when really overall revenue and stuff is declining. So it's kind of interesting game.
Well, yeah, it's one with a lot of BS in it, that's for sure. And it is a game, you know. And I, what's that, Josh?
Can I just chime in real quick? I think, you know, as these people come out through the quarter, you know, the revisions, like the stocks react to that, right? But you know, if they lower, you know, revenue estimates and stuff, the stock will react to that throughout the quarter. But I think they do the window dressing, you know, to make sure, you know, they get above the estimate before, you know, the actual earnings release. But throughout the quarter, I think that, you know, at least companies that get that kind of attention, you know, can move the stock. So just a thought.
And then also,
but what I'm saying is, you know, like the June quarter ended, right? So April through June, all 500 companies reported, and if you add up all their earnings per share, was that up or down from the same quarter the previous year?
Right.
Right. And that number is not readily available.
No.
It's not readily available. So it's not easy to find. So,
Well, I think the other thing, you know, is they swap out, you know, companies in the index too. Not frequently, but that could also, you know, you don't have like a perfect raw number. You know, if they pull out, you know, GE and put in NVIDIA or, you know, Palo Alto, you know, it's gonna skew numbers.
I agree. Yeah, they put in Tesla a few years back, and I forgot who they took out, but and I think I don't know if GE is still in the S&P 500.
Yeah, no, I think they're out, I think, but I don't know. I'm actually going through the update to this list in our system. I do it like twice a year or so.
Yeah, you make a good point. So I don't know how easy that comparison is, but it's a tough one to find.
Mm-hmm.
Josh, one thing I'll just point out, I think Dave talking to the, the pricing power, here we are with the consumer staple, XLP, it's Procter & Gamble, Costco, Walmart, Coke, Philip Morris as, the lead stocks. And since our meeting last week, look at this bad boy. No indication that, there's pricing power concerns just yet. So, it's one to keep an eye on, but, there we are through target 3. But that hasn't happened very often in XLP.
No, I doubt it.
Yeah, I think
We'll see if it can turn that into support. They do have pricing power. I mean, everyone's got to eat, everyone's got to bathe and brush your teeth and all that.
yeah, the high visibility news articles were Kroger and Albertsons because they're trying to merge, and they were called out by, I think Harris was saying that, yeah, you were gouging on prices. Your profits far exceeded your input prices that you reported for the last 2 years. So that's why that one is drawing a lot of attention, because there's a merger on the table.
Mm-hmm.
Yeah, they had an excuse to raise prices and not get bad press. I mean,
Yeah.
of course they're gonna take it.
Yeah, Pepsi's taking it on a channel bet too, for that same reason. I noticed. I listened to that conference call too, and their CEO was acknowledging the fact that, yeah, we're going to take it easy on price increases for a little while.
Volatile world. All right, Josh. Thanks,
Yeah.
everybody.
Yeah, thanks, Joe. Any other questions, comments before we wrap it up? All right. Well, thank you all. We'll do it again next week.
Thank you.